Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq, coming to you live from Mainnet 2024 by Masari. Joining me to kick off our coverage, we have Chris Brodersen, Managing Director of the Business Advisory Group at EisnerAmper. We're here to discuss the adoption of tokenization and why accounting hygiene matters more than ever. Chris, it's great to see you. Welcome back to the show. Welcome to Trade Talks. Let's talk about tokenization for a moment here. There seems to be interest in it, but adoption has been relatively slow compared to expectations. Why is that?
Right. So there are a myriad of challenges, and you really need to figure out is the juice worth the squeeze. So first, there's the regulatory fear. We talked about the SEC and their behavior not long ago. How are we going to represent the asset? And then more importantly, where and how is that thing going to trade? There's no point in tokenizing something if you don't have a place to transact it. So is that an alternative trading platform or is that a traditional stock exchange? So all those things need to be figured out on the front end. However, there are some really interesting things out there happening. We're seeing broad adoption by folks like BlackRock and money market funds. We're seeing adoption in collateral management. These are the things that I say are easy. Because one of the other problems is delivery versus payment with tokenization, right? How do we do that? And so if we start talking about traditional financial assets being tokenized, you have to pre-fund your wallet in order to transact. And banks work on a net basis. So liquidity could be a problem. So these are all the things they have to figure out. The flip side is we're seeing really interesting projects like ERC 3643. I don't know if you've heard of that.
Yeah, tell us more about that.
Yeah, so it's basically a permission token that embeds the compliance logic into the token itself. So it restricts who can trade it and where it can be traded and all those other things. So it makes the compliance function, in theory, more efficient.
Yeah, I was going to say that's got to make the compliance people happy. But you bring up this point of accounting hygiene, and in some areas they haven't even prioritized this yet. That doesn't make much sense to me.
Right. Well, a lot of the companies that I've seen at EisnerAmper, they were startups at one point, and accounting is not sexy and it's not fun. And when you're, a 2, 3, 10-man operation, accounting is not first and foremost on your mind. You're probably running through QuickBooks or something like that. But over time, it becomes critical. And why? Because I've seen a number of companies, and very large companies, by the way, come to us seeking an audit that's crypto related. Why do they want the audit? Typically, it's for one of two reasons. It's either fundraising or it's licensing. And you need an unqualified audit to get those things typically. And that what I've found is that these companies are not even close to being ready for an audit from a controls and accounting hygiene perspective. So now we have to spend a whole lot of time and money getting them ready for that.
Right, but if the SEC has in place this framework around it, how is the IRS able to determine what these assets are, what type they are, how they're taxed, how they're managed?
Well, it's not about the tax treatment. It's
Right.
It's about the auditing. Do we have the proper controls in place? Do we?
But I'm saying even beyond that. I mean, if you don't even know what it is that you're auditing, in theory, if it hasn't, there's no framework around this.
We know what we're auditing. Again, it's the lack of controls and it's the lack of processes and those sorts of things that an auditor needs in order to certify that yes, here are the assets. We know that they're there. We're able to test for those.
So you're not even at that point where you're reporting anything. You're just trying to understand what your inventory is. So are solutions on the horizon, or is it just a matter of working with these smaller companies to get them up to speed?
I think it's a matter of these companies need to understand why they need to do this, and it's only through painful experience that they start to understand that okay, we need to get house in order or in better order, so that we can legitimize our business through not.
Well, no one ever said startups are easy, did they?
No.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Mainnet. I'm Jill Malandrino, global markets reporter at Nasdaq. All right.